Hello and welcome to 5 Minutes of JCL. Thank you so much for joining me. We'll run through the 4 positions that I've either closed out or trimmed last week or so, and the proceeds of which have been partly used to buy one very undervalued Chinese stock. So stay tuned to find out what that is. So we'll start off with the individual stocks that I have sold. We've got here Bank of America as the first sale. Now, the reason for this is I've been wanting to consolidate the number of positions in the portfolio, and I have several banks. OZK is one of my favourite investments. It's a good long-term compounder. Investec is a UK bank that is still quite undervalued. There's a good return to come from that. And that left me with Bank of America or US Bancorp. The feeling was for me that US Bancorp edged it slightly in terms of the longer-term return. It was just slightly more upside to it and better dividend. So I've kept US Bancorp and I've closed out my Bank of America position entirely. Made around about 35 to 40%. This one I've actually taken a little bit of a hit on the currency side of around about 10 percentage points. So it's actually quite significant on this. And with Bank of America, we can see the price to book is quite a bit over 1, so that suggests it's not undervalued. Have a look at that price chart. We're sold out around about 42, so it looks like it was a good time to sell. So I've taken that money. I've also closed out Maiden Holdings. And we have a look at the busy US portfolio that I'm consolidating. You see Maiden Holdings here at the top. It's a very small portion, and I managed to make a single-digit profit. I think we're talking about 2%, so very minimal. It's one of my highest risk holdings, and rule 1 is don't lose money. It's Warren Buffett's rule 1. So I thought, better chance I'm losing money on this one than others. So I can kill this position and actually find a company which alternative investment has a very high upside. So I've taken the money from Maiden Holdings and used that money directly to buy a share in Alibaba. So I think that's a good swap. I've already held Alibaba. This reduces my average further. I got it at 190 last week. So I think that's a pretty good swap out. And the Bank of America is there in cash, just waiting for more undervalued opportunities. And actually, we see Alibaba has dropped further this week to the low 180s. So keep your eyes peeled on that one, because I may well be buying some more. So those are the 2 specific stocks sold and what I've averaged down into. But I have also reduced my position exposure in 2 index funds. I'll reference back to my recent UK portfolio update, and I'll leave a link at the end for you to have a look through for this one, and also the American one we just had a look at just now. And I have reduced that FTSE 100 and UK index exposure, which is probably about a quarter, in fact just over a quarter of my UK portfolio. And the reason for reducing that is it's been part of my plan over the last few months to just slowly chip away at those index positions. It's unlikely, my assessment, to give me 10 to 15% a year return. So therefore, I can chip away at them and reinvest that cash into a superior alternative investment. That seems like a sensible thing to do. I've got a little bit more cash on hand, ready to look at good opportunities to lower my average, or perhaps even a very new high quality investment. So that's been a good week in the portfolio, I'd say. Closed out 2 positions, so the portfolio management is simpler, cleaner, and a bit easier in terms of the workload. Averaged into a strong long-term hold Alibaba, and then chipped away at that index, which has been dragging my returns back a bit. So if you found that interesting and you think it's a good move, do hit the like button below. It'd be much appreciated. Probably be another update towards the end of this week, because I'll have some more news, so stay tuned for that, and have a great rest of the week.